Hi everybody, Thomas here at Rebel Income. No matter what their approach to the stock market may be, it seems like everybody is looking for that proverbial silver bullet. The one thing that is going to guarantee success every time, time after time. It's just one reason that there are so many different investing systems, technical indicators, and information sources available to digest at any given time. I don't really believe in a silver bullet. If there were, after all, we'd all be doing the same thing. Successful investing is an intensely personal exercise. It's something that requires study, experience gained by practice, and a lot of patience. All of those qualities are a function of time, and that fact is the single biggest reason the majority of people never really pay as much attention to their investments as they should. Over my years as an investor, I've learned by studying and practicing a lot of different systems. Along the way, I've learned a lot about probability, success rates, and trading expectations that have shaped my Rebel Income system into what it is today. I talk the most about the fundamental and value-driven elements of my system because in the long term, those are the most critical factors in making a sound investing decision. That sounds strange to some investors who cut their teeth on reading stock charts, which is also called technical analysis. Trends, pivots, support, and resistance may not be the first things I pay attention to, but that doesn't mean that they aren't important. In this episode, I'm going to talk about the 4 chart patterns that I've found provide the best setup for success as an options seller, and how to use those patterns to determine if timing, fundamental strength, and value opportunity all line up for a winning combination. Before we dive in, I want to take just a minute to invite you to check out my Rebel Income Patreon page. I publish daily exclusive access content on this page, from stock reports detailing the analysis that I do in search of the trades that I publish for my trade alerts, to lists of underpriced dividend-paying stocks, and even weekly recordings discussing current open trading positions and current market conditions. You'll find the link in the description area of this video. Take a look. I know you'll find something that you'll be able to use in your own trades. The first pattern I want to talk about is what I call a bullish level 1 setup. Bullish level 1 occurs at the extreme low end of a long-term downward trend and is invariably characterized by seeing the stock below its long-term trend line as shown by the 200-day moving average. That is shown in this case on my chart for United Airlines by the blue line on my chart. Now, in most cases, this 200-day moving average will also be sloping downward. It may also begin to flatten out, and that's a positive indication, but it isn't required. The other indication of the stock's trend that I like to use is the 20-day moving average, which in this case is the green line that you can see on my chart. The 20-day moving average will invariably have also been going down following the 200-day moving average. However, at some point it will have bottomed, begun to flatten out, and begun to go up again. Now, I've traced the period in November where this happened for United Airlines, and that's where the first ideal bullish level 1 setup happened. However, more recently, as the stock has begun to establish a consolidation area, we've seen a little bit of the same price action going on right now, with the 20-day moving average having been going down, begun to reverse, and begun to go back up again. The stock is now above the 20-day moving average, and the signal for this pattern comes when you see the formation of what is generally called a bullish hammer. A hammer is a candlestick formation that in this case occurred about a week ago as the stock pushed above the 20-day moving average, was characterized by a top end that looked very much like the top of a hammer with a long handle at the bottom. Now, hammers can take a couple of different configurations. It can also be inverted, where you can have the hammer head on the low end and then the handle on the top. Sometimes there can also be a little bit of handle poking out of the opposite end of wherever the handle is. The direction of the hammer candlestick is less important than the existence of the candlestick itself. Now, this did happen about 5 days ago, which would have been the ideal opportunity to enter a near-term trade for the bullish level 1. As a put seller, when I see this type of formation developing, with this kind of momentum to the upside, this provides a very good opportunity for a new put selling trade. Probabilities of success with this pattern in terms of seeing the stock move in the direction that I want are about 60%. The next pattern is similar to bullish level 1, and it's one that I simply call bullish level 2. The difference in this case is that the stock will have pushed above the 200-day moving average with some momentum. We can see in Skyworks that this happened from November to December as the stock rallied very strongly higher. At some point, that momentum is going to reverse and the stock is going to begin to go down as traders begin to take profits. The 20-day moving average will typically also have gone above the 200-day moving average, but will then begin to bend over and come down. The distance between the 20-day and the 200-day moving average will begin to narrow. And when you see that distance narrowing, you begin to have exactly the kind of setup for a bullish level 2 opportunity that you're looking for. The signal for a bullish level 2 is exactly the same as for a bullish level 1. And again, you're looking for a hammer, which in the case of Skyworks also happened about a week ago with the hammer formation as the stock began to push near to the 20-day moving average. It looked very much like this. In this case, this hammer was called filled because the hammer end is colored in. Whether it's filled or open is also less important than whether it is inverted or not. The appearance of the hammer is the high probability signal. Again, like with bullish level 1, the probability of success for this pattern is roughly about 60% in my experience. The next pattern is what traders generally call a double bottom. Double bottoms, just as with a bullish level 1 pattern, occur at the extreme low end of a long-term downward trend. In fact, when a double bottom formation begins to form, the stock will really not have demonstrated a lot of bullish momentum. However, it is categorized by what looks very much like a W formation, where the stock will have been going down, will have found a bottom, gone up, retraced back down again near to its previous bottom, and then rallied back up again. Now, for VF Corporation, this first bottom occurred in November. And there are two bottoms here, but considering the short amount of time that they covered, I'm lumping them together as the first bottom. You can see the stock had been going down strongly from that point. Once it found bullish momentum off of that level, it rallied to a near-term peak at around $20 per share before it again began to go back down, and it found its next bottom at about $15 per share. This is bottom number 2. This bottom doesn't line up exactly with bottom number 1, but it doesn't have to. As long as they're generally in the same range and you start to see the stock show bullish momentum, which it has been doing since then. Now, if you're looking for a traditional bullish trade, the signal for a double bottom formation comes when the stock breaks above the resistance that you can identify by the top of the W formation. In this case, that occurred in December at $19 per share. So this would be the signal line that you would be looking for if you're looking to buy the stock or possibly buy a call on the expectation that the stock is going to rally higher. As a put seller, I'm not so worried about trying to look for that break above resistance before I place a trade. The reason for that is because the general success rate with a double bottom formation is about 88%. And the fact is that as a put seller who is also looking for value, I can find great opportunities to place really functional put selling trades as the stock begins to form the second leg of the W formation. Time is one of the critical elements that you need to think about when it comes to seeing a double bottom formation. This is not a formation that occurs over a period of just a few days. This usually takes several weeks, if not 2 to 3 months in most cases. The last pattern that I like to use in my Rebel Income system is the triple bottom. This is an extension of a double bottom formation. Just as you think of the W formation that comes with a double bottom, what will typically happen is that the stock won't find enough bullish momentum to break above that short-term resistance provided by the middle point of the W. Instead, it will drop back again near to the support that was established by the previous two bottoms, and then it will finally reverse. As with the double bottom, the traditional signal point for entering a bullish trade is when the stock actually finally does break above that intermediate level resistance and go higher. Triple bottoms obviously tend to take more time than a double bottom formation does. In Lear Corporation, we can see bottom number 1 in October, bottom number 2 in November, a little bit lower at around $125 per share, and bottom number 3 in January, near to the same bottom that occurred in October at around $130 per share. We can draw the legs of the triple bottom formation by following the stock's highs and lows. Now again, if you're looking for a traditional bullish opportunity, then you would need to wait for the stock to break above the resistance provided by the top ends of the previous 2 pivot highs, which in this case is at around $142. But again, as a put seller, I'm not really so worried about waiting for that break above that resistance before I'll place a trade. Simply seeing the stock in this consolidation phase and starting to rebound higher off of this third bottom is usually a terrific opportunity to place a very high probability put selling trade. The general success rate in terms of seeing a stock actually reverse its trend out of a triple bottom is around 87%. So just like with a double bottom, these provide excellent opportunities. I'm often asked about how to find an exit point for an option selling trade. For me, the system is pretty simple. When I sell a put option, I use a strike price for my put sale that represents a price I would be willing to own the stock at. That means that I'm willing to let the put option expire and accept the result. If the stock finishes below the strike price I've sold, I'll buy the shares at that strike price and look for an opportunity to possibly begin selling covered calls. If the stock finishes above the strike price I've sold, then the put option expires worthless. I keep my money and I can move on to the next trade. I can think about whether to use the same stock for my next trade, possibly to move on to something else. The same is true with covered calls. I simply let the option run to expiration. If the stock is above the strike price that I've sold, then I'm going to sell my shares, get my money back out of the stock, and have it available for my next trade. That does mean with covered calls that you have to accept that you're setting an absolute limit on the amount of capital gain that you can achieve. I never place a covered call trade without accepting that reality. Recognizing these patterns and using them along with solid fundamental and value analysis has provided me with an excellent balance of reward to risk with a high probability of success over time. It's a process I can repeat, which is critical to a successful investing system. And it's something that I enjoy making available to others as well. Thanks for your time, my friends. I hope this has been useful. If you like this video, please do click here to subscribe to my channel so you can get notifications for each new video I publish. You can also click here to learn more about my Rebel Income system. Thanks again. I'm Thomas. Talk to you again soon.